Good morning, and welcome to the first Evolution of Financial Marketing event. We're so excited to have you all here today. It's such an exciting event. It's really so wonderful to be able to connect with all the marketing people across the financial sector and hear their views, share the ideas on the latest novel strategies, to the customer experience, to changes in loyalty marketing, and everything to do with marketing in the financial sector. So we're so excited to launch this event. And I was just speaking to the panel earlier, and I was saying this is the perfect event to host face-to-face. And I hope in the future that it's in a lovely location and somewhere in Cyprus or wherever we can host it. And we look forward to face-to-face events in the future. In the meantime, I'd like to thank you all so much for joining us today. We've got over 150 marketing professionals from all over Europe, Middle East, even the US. So I really look forward to hearing some interaction, questions being posed. It would be wonderful to get as much participation as possible. So thank you very much. I'd also like to thank all of our speakers for their contributions today, for taking the time to share their thoughts, their insights. It's really wonderful, and we really appreciate all your efforts. And of course, I'd like to thank the QUBE team. They've worked really hard in making sure that we get everything organized in terms of the branding, in terms of the promotion. So we've had a great support from the QUBE team there as well. And of course, thank you so much to Marta, who's put the event together from the production side as well. She's done an amazing job as always. I'm going to hand over to her shortly. And I'd like to thank, of course, our chair people, Chris Crispo and Dr. Christine Bailey. Thank you so much for agreeing to moderate today's sessions. We're expecting some really great sessions today. So thank you so much to that. And I'm handing over to Marta. Thank you.
Thank you. We are glad to host this financial marketing event for the first time. We hope not for the last time. And as Lily mentioned, hopefully to the physical event, maybe next year, maybe the end of the year, who knows that. But we are looking forward to it. I hope you all will have a great time, good discussions. We encourage you also to ask the questions. There is chat, there is a questions tab. We will also post some polls, so we hope the interaction will be high and you will get the best out of it. So wishing you a great time, and yeah, enjoy it. We're giving a floor to our wonderful chair people.
Thank you. Thank you. So, Chris and Dr. Christine Bailey, I'm handing over to you. Thank you so much, and we wish you all a wonderful event. Thank you.
Hi, good morning, everyone. My name is Christine Bailey, and I've been in the business-to-business marketing space for about 30 years now, working in the technology and fintech sectors, most recently as Chief Marketing Officer for Valitor, a European payment solutions company headquartered in Iceland. I recently set up my own company, Sophia Marketing, and I published a book last November called Customer Insight Strategies, and that was the topic of my doctorate, which is, you could call my mastermind subject, what I'm very passionate about. So I wanted to just give a few thoughts, my thoughts on the sort of scene setting for novel marketing strategies today. And the first one is, the world was already becoming more digital, wasn't it? And the COVID has just massively exploded that trend. So about 60% of the world's population is now online. That's been about a 7% increase year on year. But what really stood out for me is that there's been a 13% increase in active social media users in the last year. And we're going to talk about what social media marketing means to marketers in the first panel session. And what this explosion of digital is doing is creating even more data. And we've become very addicted to our data, haven't we? I don't know in what country you're in, but in the UK, we've had these daily briefings and we're all hooked on the stats because data creates certainty, and we're living in a very uncertain world. But those companies that have been able to interpret deep customer insights based on their data and adapt accordingly are the ones that have created competitive advantage. And others have just become data blind. So Domo gives a stat of 83% of marketers are data blind, just due to the sheer volume of analytics and data that we have to deal with. And the third thing I wanted to mention is, you know, marketers have really had to think how they differentiate themselves, because with the in-person channels largely switched off and people having to move to digital channels, you know, how can you differentiate in those digital channels? And consumers are orientating themselves towards brands with purpose and strong values, but you've got to do that in a really authentic way, otherwise you're going to get found out. So how do we humanize those digital experiences? And again, we'll be talking about that a little bit more in the panel. So those are just a few thoughts from me. I'm going to hand over to my co-chair, Chris Crespo.
Thanks, Christine, and good morning to everyone. It's really a pleasure to be here. It's a beautiful spring, sunny day in Copenhagen, where I'm connecting from. This is actually the third QUBE event I participate on, so thank you very much to the organizers for inviting me. And I'm just going to say it outright, I'm not a marketeer. I have a background in behavioral economics, and I've held a number of different roles in banks. The latest one was the head of digital strategy and chief futurist at Nordea. And if you're anything like me, you probably recognize the following scenario. You walk into a meeting, and the meeting is represented by various business areas. And the purpose of that meeting is to discuss how can we take these products to market more effectively, right? So the discussion gets going, and soon you're talking about how to improve the features of your mortgages to bring them out to market. How can you make your car loans more attractive, or how can you get more people to sign up onto your pension fund? However, I think that in these discussions, there is an underlying assumption that goes completely unchallenged most of the time. And that assumption is customers want to buy the products and services that we, the bank, wants to sell them. But I think we all instinctively know, because we're all consumers, right? And we know that we don't really want to buy a mortgage. What we want is a home. We don't need a car loan. We need to be able to get comfortably from A to B. And similarly, we don't want a pension fund. We just want to have peace of mind for retirement. So I think there's this disconnect between what banks want to sell and what customers actually need. And with this in mind, I believe that your roles as chief marketing officers and as heads of marketing is absolutely fundamental in making that effective translation between what the bank has to sell and what the customer needs. So armed with this problem, I left my last job at Nordea about a year and a half ago to start a digital media company that precisely tackles this. We have the mission of making banking friendly. The company is called Fast Forward Banking, and we are, needless to say, extremely excited to hear about all the insights that are going to be generated through today's panels, through today's discussions. And just to say, I wish you all an extremely productive morning, an insightful session or number of sessions, and I will be talking to you again later today. So with that, I'll hand back over to Christine, who will be introducing the first panel of the day. Over to you, Christine.
Thank you. And you'll notice I have to be Christine today, because two Chris's is just way too confusing this early in the morning. Right, so we're going to go now into our first panel, Novel Marketing Strategies in the Financial Sector. And I'm absolutely thrilled to be joined by some very interesting people. So if we can now see them joining.
Hello.
Hi, Samita. As you've joined first, all right, let's just get everybody on board. Hi, welcome everyone.
Good morning, everyone.
Hello. Hi.
Good morning. So I think what we'll do is I'll just ask everybody to briefly introduce themselves. So I'm going to start with, on my screen, Samita. Can you just introduce yourself, please?
Sure. Thanks, Christine. And hello, everybody, to all the 70 attendees that are there online. I'm based in London. I work for a financial technology company, Finastra, as the global head of platform innovation and applications marketing. I've been in London for now more than 2 years. Before that, I used to be in Singapore for more than a decade as a regional chief marketing officer for Asia Pacific. And it has been an incredible journey. Some of it I will share with you in a bit.
Thank you. Fabrizio.
Hello. Hi, everyone from London. My name is Fabrizio. I am from Wise, that most of you probably know as TransferWise. I've been at Wise for the past 5-6 years, where I lead the organic acquisition teams within our marketing organization. Our focus is to grow the share of customer that we acquire through our own channels, This is really essential for two reasons for our company. One is we eventually want to move money across the world with almost no fee, and therefore, growing organic acquisition is important. And the second is we want to operate a profitable business, and this is again another factor that helps us facilitate our mission on that front.
Okay, thank you. Over to you, Marius.
Hi, everyone. Nice to meet you all. I'm Marius, Romanian. Moved to London 5 years ago from fitness industry to work in fintech, which is a strange change in career. Work for TransferGo, which is a money transfer company, and we are focusing mainly on migrants that need to send money back home. As I said, been with the company for 5 years now in London, and I work as Chief Marketing Officer.
Thank you. And last but not least, Jazz.
Hi, everyone. Yeah, my name is Jazz. I'm a product consultant and a founder of Bitzel. So Bitzel's a product-focused consultancy helping fintechs and other FS organizations build products customers love. And I've helped build challenger propositions in the UK, Middle East, and Australia.
Okay, fantastic. So we have a lovely, diverse and experienced panel today. Right, so Marius, I'm going to come to you first with my first question, which is, what are the key trends that are shaping the post-pandemic future of financial marketing?
Well, let me start by saying that it's not transition to digital, because if I hear that one more time, I think I'm gonna eat my laptop, because that was happening anyway. It was accelerated. Yeah, especially was accelerated in certain fields, but in my field, like fintech, we were doing digital all the time, and we were aiming for that when we always said like digital first. So let's put that on the side. I think one thing that I see becoming more and more obvious is less pretty packaging and creative and cute, and more product first, meaning that the focus is more on product, the quality of that product and what that product is offering to the customer. And then marketing is a support department that is making that product visible, but is all about honesty and highlighting the benefit rather than the functionality. And putting that in front of the customer, this is the benefit, this is how your life will be easier, and not all this like emotional packaging and pretty and cute videos and all this fluffy stuff that used to be in the past. This is more, especially in financial services, it feels like it's more to the point. You have to be serious about it. You have to tell the customer pretty quick what's the win, what's the benefit, how their lives will be made better through the product. I think product and marketing more than ever have to work really, really well hand in hand. And one thing that I hope will tone down is, I think we will hopefully we'll be able to delete that or turn it into something different. I hope for less fake political correctness, where companies are trying to win customers by faking it, pretending that they care. I wish for more honesty. Just tell the customer that you solved the problem, rather than riding on social situations and so on, which I think more and more customers feel the lack of honesty there.
Yeah, absolutely. I think authenticity is really important. You get found out pretty quickly if you're not authentic. And Jazz, have you got any observations on, do you see any difference in marketing strategies with challengers versus the traditional incumbents?
Yeah, I think there's a huge difference actually, because I think traditionally large incumbents have gone through an era where TV, physical media, paper, print, billboards have been the channel of choice, and now they have their brands are built and they've got a lot of brand recognition. They don't really need to do much of that right now. So newer challengers, I think, are using much more novel tactics, and I think they're having to get a lot more bang for their buck. Some of it's down to necessity, due to things like tight budgets, but I think some of it is also down to the fact that a lot of challengers are a lot more agile. They have a lot more youth and kind of enthusiasm in their teams. So they kind of come up with different and more innovative ways of marketing the company. I've got 3 specific ones actually. So one that I've noticed quite recently is crowdfunding as a marketing tool. So although obviously crowdfunding is a great way of getting your customers directly involved in the product, it builds a lot of really specific brand advocates. Those people who are going to download the app, who have got an investment piece in the company themselves, and who will tell their friends, this app is great. The proof is I've invested. That's how good they are. I worked for a company quite a couple of years ago called Lumio. They crowdfunded last month. They raised their crowdfunding target, but more than that, month to month, they had a 94% increase in new users from the non-crowdfunding month to their crowdfunding month. So, basically doubled. They doubled their number of new customers just through going through QUBE and doing a crowdfunding round. So that's one tactic. I think obviously, incumbents can't really crowdfund. They're listed on the stock market, so that's a way of getting investment into the company, but it feels very different. Another thing, and I promise you, I haven't spoken to Fabrizio about this before, but another thing that I find is novel and works really well is things like marketing campaigns around strategic changes. So you'll notice that TransferWise has transitioned to Wise. So that in itself is a strategic change to kind of go more along to demonstrate their diverse product offering. People who hadn't heard of TransferWise before probably would have in the past few months, based on the discussions around socials. I think they did a lot of good stuff around kind of getting users engaged about the name change as well. So what phraseology would you use? What kind of cool engagement can you have with the word Wise and having a bit of fun with it? And also, I think things like Monzo never used to be Monzo. It used to be called Mondo, and they actually crowdfunded their own, crowdsourced their own name change, getting customers involved directly. I think is a great way of marketing the brand. And then just finally, just a quick one, just more innovative content. I feel like challengers often come up with more innovative things like infographics that are shareable, that you want to share with your friends to get them involved. Things like mailing lists that come out every week. So I read things like Finimize, MS send out things via a mailing list. So a lot of fintechs are creating more valuable, usable content, educating as well as informing. And I feel like incumbents don't really do that much.
Thank you, Jazz. Fabrizio, I'm going to come over to you now. It's a nice segue, but I do want to hear specifically how you've been using social media channels, because we can't ignore that massive trend of that increase in active social media users. So, tell me about how you've used social as a channel.
For us, it's been the case pretty much since we started to ramp up our marketing activities 5-6 years ago, probably even earlier than that. And the advantage that we have seen, particularly in platforms like Facebook, where the targeting is more structured and evolved as opposed to other, is that you're able to target audiences that are not necessarily aware that they need a product or there is an alternative, or they should even shop around for a new service, which is quite different from what we used to do otherwise with search and Google, where pretty much we are like looking for a customer that is in the phase of shopping around for an alternative. And this, particularly for new challengers, has been quite an important channel. Most of the neobanks have raised the investment in this channel in the past few years, even before pandemics. To be honest, pandemics has just kind of added to like the people that were running this at scale to do it even better. But this has been pretty much the case since. The only drawback probably on the side of social is there are, like, apart from Facebook, and like Instagram and like basically all the Facebook suite, the measurement is not often that sophisticated enough in some situation to really scale investment very efficiently. And the second bit is we've seen a little bit of drawback in the past probably 6 months on the privacy side, which is like eventually good for consumers, but then like as opposed to before, like these platforms tend to like send back aggregated data when it comes to attribution and measurement, and this makes it a little bit harder than what it used to be to have the right understanding of whether we are investing in the right channel. But it still is still a very interesting proposition to the point that we run brand activities on Facebook as opposed to TV or outdoor. This is mostly due to the fact that our margins are a little bit different than people that have been in the business for such a long time. We go in with a more aggressive price proposition, which also implies that our marketing investment has to be more targeted, more cost effective, and then that's why like we tend to shy away from like more traditional media like TV, and even on the brand side we invest in channel like Facebook, mostly because we can attribute better what the value is, and it's really important going forward because we especially for new challengers, most of the companies are building organizations that have got very low lifetime value of the customer in some situation, and it's very difficult to run effectively like TV and some of other channels if you cannot afford to have like a relatively high item value. And like often because similar is happening to us, right? With like moving to Wise, our product on day one was just one. We were offering consumer money transfer, sending money from bank account A to bank account B, as opposed to more like established institution where that product offering is more wide. Therefore, the value of the customer can be higher over time. And as opposed to most of the challenger, they tend to start from one decent product, apart from a few companies that try everything at one go. But that means that the value of the customer over like 12 months, 24 months is relatively lower, and therefore even their ability to invest aggressively in high CPA media is a bit harder. Yeah.
So I think the social media channel that I'm curious about is Clubhouse. And probably about a month ago, I started seeing everyone posting about you being on Clubhouse. So I went to my teenage daughter and said to her, what's this Clubhouse? And, got the eye roll. So I thought, okay, I'll go and educate myself. So, I've seen a few good things, actually. I did a LinkedIn post around Clubhouse. So, Marius, can you tell us about Clubhouse?
Well, I don't have a teenage daughter, but I have somebody, a very young girl in my team, and she was very excited about it. I found out about it actually just a few weeks ago when she mentioned it, and she was really pushing for a test there. So I had to learn about it, and I was like, okay, let's see what this is now. Looks interesting. Is happening, from what I understand, is happening in rooms, and it's conversations. It's in a way like a radio, I guess. And you have like all kind of conversations going on. The thing that is a struggle, and this is where I align with what Fabrizio mentioned earlier, is attribution. Because the reason why, for example, we don't use TikTok more, and we're testing and learning. This is our strategy. But it's very hard, especially when you are a company like us, where we go for a niche. We don't go for everybody. We don't sell shoes. Everybody needs shoes. Although I'm sure none of you wear shoes today because you're like probably below in your pajamas.
I've actually got slippers on.
But we have to be very focused on our target audience. We have to find the right customer, the customer that needs our service. So we do require these platforms to give us spot-on targeting and attribution. And unfortunately, Facebook is far ahead of everybody else. This is why everybody's using Facebook so much, because as you said earlier, everything is going towards data, and marketing is driven by data. The times where we go to an expensive agency and we ask them for an award-winning campaign, and that's the goal. That time is
Yeah,
it's going way fast.
Yeah,
right now everything's public. Yeah, so I would say that the challenge would be, I mean, you can always test and learn. You can always do a kind of like gymnastics with your data to figure out where that traffic is coming from. But eventually all these platforms will have to step it up and deliver to us proper tracking and attribution, so we can actually, as marketeers, we can use them and compete with Facebook.
Yeah, I love that phrase, your gymnastics with your data.
Yeah, because you know how you do it when you use a channel, like a marketing channel that is not very well trackable. You have to do all these gymnastics in your analytics where you try to figure out, okay, if I eliminate these 5 things, and then if I just look at this, is this coming from TV maybe?
Yeah.
From a billboard that I put on a building, like how do I figure this out? And then you run surveys and so on. So this is what I'm
trying to explain to our stakeholders, last touch attribution. And, people always, I find around us, the sales leaders, they always want to say, well, what tactic performed the best? We'll just do more of that. And you're trying to explain, well, that might have been the last touch, attribution, but it was all these other 10 things we did before it. But,
yeah, that's another complex conversation between multiple touch and last touch attribution. Everybody's debating this, like which one is the best, which one you should set up, and how do you, if you want a multi-touch one, like how do you actually do that in your data? But it's true, because especially when you work with, you don't work with vanity, because fashion is all about vanity. I mean, I can convince you to buy a beautiful scarf, a beautiful pair of shoes, and so on, because I play with vanity. But when it comes to financial services, that's need. You need it or you don't. I can't trick you to send money if you don't have the need to send money, right? I must be really, really good as a marketeer. So then it's very important that I have multiple touch points to make you trust me as well. So that's why I need to look at multiple touch points, like where the customer saw my ad, and then build on those channels.
Yeah, we're going to come on to trust a little bit later, but if I come to Samita, I'm dying to bring you into the conversation. So if we think about, what we need to engage with our stakeholders on, given that, digital transformation is the thing that everybody wants to do right now. I know that you think marketing has a key role to play in actually leading digital transformation. So can you tell us your thoughts on that?
Sure, absolutely. Before I talk about how marketing could lead that, or when I say marketing is really the headlights of the business, or can become the headlights of the business, let's take a step back. Most organizations are ready or getting ready to go through the phase of transformation when they realize that what the market needs or what the customer wants is no longer being served by the organization. So clearly there is a big disconnect or a gap between what the products we're selling versus what is required. Now, this is where when the organizations are at the crossroad, they have 2 directions they can take. I mean, one is really relook at their current product, the technology stack, the processes and skill sets, and move forward towards a holistic transformation path, or just continue doing what they're doing with what we call, everybody would have heard of this term, putting digital lipstick on a pig, or a real lipstick on a pig. And this is where, just picking up from some of the examples that Jas and Marius gave, where I picked up, in terms of crowdsourcing and innovation. Innovation, 99% of the innovation, irrespective of what industry you are in, comes from outside if you really want to be a transformative organization. Now, in this scenario, who should lead the transformation in an organization? Is it the CEO? Is it the Chief Digital Officer, Chief Innovation Officer? In my opinion, a Chief Marketing Officer and their entire marketing organization is in current times in the perfect place to be able to lead and drive digital transformation. Now, why do I say that? Because marketing folks or marketing organization, which I feel very proud of, is they're the eyes and ears of the business. They know what's going on internally as well as what's going on externally as well. to the extent that, I sort of call my chief marketing officer peers as call yourself as chief synthesizers of chief amalgamation officers. So while internally you have that sort of lead in terms of bringing together product, technology groups and sales groups together and be able to come up with a holistic vision for the organization that would address the customer needs. And externally, you are constantly taking data, constantly taking insights from the customers, that when you feed back into your product stack, when you feed back into how your technology should be, you are again right at the sort of leading edge and driving the organization forward. So really, in summary, I would say that true marketing, or I would say world-class marketing organizations are really leading from the front rather than being the trailers in the organization.
Absolutely. Don't know if anybody else has this. So I'm going to go back to, we talked about trust earlier, and given that these in-person channels have largely been closed down, and we're now, how do you build trust in a digital channel? It's that much harder. So Jazz, I'm going to come to you. Because you've worked recently with a couple of startups, haven't you, where they've had trust at the heart of their proposition. So what's your view on that, how important trust is?
I mean, especially when it comes to finances, I think people are very particular about who they bank with even. So when it comes to trust, it's a large part of it is marketing, because initially, if I create a brand right now and you've never heard of it, you're not likely to port over your core banking services over to it because you've never heard of it, your friends never heard of it. So I think a core part of that is marketing in itself. I think even though we're moving to, again, I don't want to ruffle Maurice's feathers, but digitized more so than before, people still want to talk to, have someone at the end of a phone, or know that there's someone somewhere who you're able to talk to. So I think a lot of the in-app trust that's built is creating features that cover some of the problems that customers may have. But ultimately, if a customer wants to speak to someone or get in contact with someone, that option is usually there. So even some of the startups I've worked with, they are still creating things like customer support center. Nowadays it's a lot easier to create a customer support center because you don't need a physical presence.
Yeah.
You can have a global distributed customer support center, which is just 10 people, one person per region, fielding calls from their specific geographies. But having that, I think it's a big thing for new propositions, especially. But making sure that funnel is managed correctly. So even features sometimes can build trust. So in-app features like being able to freeze your card without having to go call someone. The speed at which you can freeze a card is way faster than if you had to go through a call center. Get in contact with someone, verify your identity. That takes maybe 5 to 10 minutes. Now, if you lose your card, the moment you think you've lost your card, you can freeze it.
That's a great example, actually, of where you're seeing, innovative companies coming up now with exactly that, with ID verification. Gone are the days now where, I've just come from the card payments world where you had to physically go to the premises, take a picture of the premises, press the flesh. Now there's plenty of companies that can do that in a digital way very quickly. I've just set up a new bank account for Sophia Marketing. It was all digital. But if I come back to trust, I'm curious about, do you think, review sites like Trustpilot, or was recently watching a program where they were interviewing customers about if they were more likely to pick something that was an Amazon choice as opposed to, just a regular one. And of course, they all said they were more likely to pick exactly the same product that was Amazon choice. So that's a question to anyone, actually. Do you think in a digital world, there's more reliance on reviews and things, trust sites like Trustpilot?
I think quickly, just anecdotally, like forget financial services, I will always sort by rating. If I'm looking for, if there's 10 products that are all similar, I'll always look through the ratings and then go through a couple of reviews before I buy something, even as you know, stupid as a kettle. I'll go through the reviews and go, oh, you know, has there been any major, you know, defects with this thing or not? If it's less than 3 stars, I'll usually not even look at it. So I think that, you know, we are quite reliant on ratings, and especially even in financial services, we look at things like ratings and Trustpilot reviews, I think.
Yeah, and I guess the equivalent is customer testimonials. You know, they're so important. They've always been important in the marketing world. So hard to get, but even more important. Would anybody else like to comment on that, on the trust, the reviews?
Yeah, Christine, I would like to add that, you know, well said, Jas, in terms of reviews, testimonials, Christine, and sort of external validation when customers are seeking. But underneath all of that, you know, my observation, and I would say, is that when brands sort of communicate their proposition, and it is sort of, they demonstrate transparency in their intentions, and this is why, more so than ever, especially with all that's been going on, that humanity is very much needed. To what Mario said sort of earlier as well, that in sort of fluffy stuff, be true to what your intentions are and what your product and services stand for. Recently, Deloitte Digital did this survey with over 500 chief marketing officers across the globe, across various industries, and one of the findings that came out from that was, again, in the lines of being transparent to your intentions. When brands sort of service the customers in that way, customers are 2.8 times more likely to buy products from your brand versus the other competitors. So again, I think in the element of trust and honesty, more so than ever, your brand will speak for itself, and that's where, you know, customers will talk about you. Your media and analyst community will talk about you without you having to solicit for references and recommendations as well.
Actually, I'm rather addicted to the Edelman Trust Barometer. Are people familiar with that? That's an annual report that comes out. They've been doing it for about 19 years, and I always look at that. Trust, of course, is at an all-time low. I think, you know, the UK government, the trust was lower than everywhere in the world, apart from Russia, I think it was. But yeah, that's always a good one to look out for, the Edelman Trust Barometer. So in a slightly different direction, because I was very curious to hear of the experiences with crowdsourcing. And another trend that I'm aware of that I personally don't know a lot about is affiliate marketing strategies. And Fabrizio, I know you've used those, but you know, you've got your own price comparison site. So I'd love to hear your view on affiliate marketing strategies.
Yeah, I think it's somehow related to trust as well, in a way that in our case, we continue to invest in our product and in making sure that we have very high net promoter score from our customers, so that they recommend their friends. And there is nothing more powerful than your best friend telling you you should really use this because I used it and it's amazing. And then obviously people do still check, you know, website like Trustpilot, and we are on them, and as well as all sort of price comparison site to validate that this is the case. Unfortunately, in some industry, this is less so the case, and it's less the normal behavior, right? So you would never get a mortgage, a credit card, a loan without going on Money Saving Expert, Compare the Market, one of these like Trusted, or, you know, in US NerdWallet or other platform, right? But people do eventually send money with like an expensive provider without realizing that they should shop around. So like on that front, we invest a lot in price comparison. We invest a lot in anything that can build trust to our customers. And a few things that we learn is, regardless of the fact that this is digital or not, it doesn't really matter to customer. Most of our customers, they trust what we tell them anyway. Yet we invest very hard in figuring out what is it that makes them trust us. For instance, we know that when we show price comparison to our customer, both on TransferWise website and on third-party website affiliated to us, we know that unless there is at least 3 to 4 providers in the mix that they recognize, they don't trust that this is the case, because obviously you see a price comparison chart on like Wise website, and you immediately think that, oh, you know, they must be cooking and make themselves look better than they are. But often they realize immediately that sometimes when like a provider competitor to us is on top of our price comparison chart, they realize that this is trustworthy and we are, showing the information that is in your best interest, and therefore we build massive trust. Some customers, even though at a given point in time we're not the most competitive alternative, they still use us because they trust us in recommending them with the most fair option, right? So I think there are like a lot of elements that can be built around that, and part of this is also on third-party website, right? So there's so many customers that we can influence on wise.com, but majority of the customer also are on the web, on third-party website that we have affiliate relationship with. In that case, we have seen things shifting quite a bit. Early days was just new challenger being on there in the hope of finding the first customers that were switching to them, as opposed to now that we've seen even more established player coming into them because maybe they realize that they have kind of not put too much attention into some products, and now they want to rebuild customer acquisition against this product. So this is becoming more important even for some players. We have seen that at least in few markets where it used to be just comparison side recommending new challenges, that now we both have incumbents and us on the competing for that visibility on affiliate side, which is challenging for in industry where price and quality of the product is regulated. Is a bit more challenging for us, where apart from Europe, where the European Union has kind of passed a couple of law on transparencies, it's difficult to have a strong regulation on price. But overall, I think customer and most of these companies, on the long run, they try to recommend what is best for the customer, even though there are some situations still where they optimize for revenue as opposed to customer savings. And then that's where we
eventually.
Yeah, that's the reason why we invest in our own price comparison. That's the reason why we partner with specific people and not others, is because they don't literally do what is best for the customer. They do what is best for that company, right? And unfortunately, this is a bit of a challenge for new players that have got generally low CPA targets, right? As opposed to incumbents that tend to have higher price. Therefore, sometimes they can pay more to these comparison sites. But overall, I think it's still important and interesting. And we have seen over the past, this is a channel that we've been invested since early days of marketing advice, and it continues to be important. And we've seen that despite shift, in some markets, is still valuable to help people compare, shop around. I think it's this behavior of understanding that you should shop around before you go for a given product, as opposed to buying all the product from the provider that you are with already, that is missing in some situation. It happens in verticals like mortgages and things like that, but it doesn't happen in other financial product that much.
Okay, thank you, Fabrizio. I'm looking at the clock because I want to have one last question, and I want to make sure we go and look at some of the questions from the panel. But I'm still hearing that phrase, gymnastics with our data. And we talked, and obviously it's one of my favorite topics is data and analytics. So, Samitra, I'm going to ask you, what do you think people should be doing with data and analytics to create those all-important insights about our customers?
Sure. Again, more than ever, right now, we are sort of bombarded with data from different channels and different sort of interfaces that's coming in internally from the organization and externally. And my recommendation over there is, and more we will see across the industry, more so in financial services, where the use of artificial intelligence and machine learning, as well as predictive analytics, is being used for and will be used for increased personalization. Now, what this means is when you apply artificial intelligence and machine learning, specifically in customer services, it creates exponentially sort of faster and much more personalized customer experience through better customer insights. So whether, we talked about earlier that customers are not talking about a specific loan, but it's about the need, the end need and the goals that they have. Recently in financial services, again, Lloyd Bank, came up with specifically for their customers with the current times, specifically sort of medical and health benefits added on to the wealth portfolio that they were providing. I mean, if I look at sort of at Finastra itself, where we have automated sort of trading technology solutions, and we use sort of artificial intelligence in financial services, specifically in capital markets, we are using all the data that we have, using machine learning to sort of detect trading errors, to detect sort of accelerate trading validation, and also have the first level regulatory requirements taken care of based on the user patterns and behavior. So in a situation like this, where in the past we were sort of more dependent on sort of human judgment and human analytics, that part of data that sort of it's coming in, we can make use of tools and technologies in the form of predictive analytics and artificial intelligence to provide ever more personalized customer service to our consumers as well. So I would say data more than ever is important, but it's also about harnessing the data as well. How do you sort of prioritize when you are sort of inundated, like I mentioned, sort of from different channels, and again, prioritization and creating those data lakes to serve you better based on the need that you have for the customers.
Yeah, absolutely. I'm going to, Marius, you've been sitting there watching. I'd love to know what kind of data and analytics, is top of your list?
Let me start like this. I wonder, a lot of times I wondered how many companies actually have a data team dedicated to marketing. Because in most cases, I hear about data teams dedicated to the finance department and like overall to the company. But this is something that made a radical change for us when we dedicated data people to our marketing team. And it's not about the tools that you use, because as marketeers, we are in the clouds. We dream beautiful words and beautiful packaging and so on. So we need these data people to support us and give us the insights, because a lot of times they can give us so much more than we can even dream of. So I think it's about the team at your disposal to actually work with tools, because again, as marketeers, I think a lot of times we will have, let's say, because for example, I come from a literature background. I'm not an expert in digging into analytics and complicated data. I can create campaigns, I can create nice productions and so on, but I need that data team to actually give me insights and give me proper tracking and give me more in-depth analytics of what I'm achieving through marketing.
I'll give a slightly different perspective on that, actually. I think the analytics tools are now becoming, so widely available and so much simpler than they were before. I would say every marketeer should be, the data analytics should be accessible. Everyone at the click of the button can get some kind of insight. So I think that's an interesting, I'd be interested in somebody else's perspective on that. Is I see it as the responsibility of everyone in the marketing team to be using data and insights, and not just something that we delegate to an analyst.
Yeah, Christine, I'll add in a point over here. It's a good segue in terms of, Marius, you brought in, and I'm very passionate about talent development and creating new roles. And I think, it's such a fascinating time for chief marketing officers and marketers to be able to look at new roles compared to the traditional roles of campaign creation or creative. I'm the first one that always tells my people that I'm the least creative person. So I hire creative people, and I use my sort of commercial mindset to look at how we generate revenues. And to complement that, investment in talent like chief sort of data scientist. And what stops us from hiring our own sort of chief digital officer within the sort of organizations, the new age sort of roles that are coming out, and that I'm personally looking at building are storytellers, data scientists, developer focused marketers, and I would say sort of digital and innovation specialists within the marketing organization as well, where they come with that techno commercial background and can complement the creative product focused marketers within the organization.
Yeah, absolutely. But I can see we have a brave person who's given us our first question. So the question from Christiana is, are there any tips or suggestions on what channels we should be aiming at first as a startup in order to build trust for our brand and services. So I'm thinking, Jazz, you might like to have a crack at that one. Please, anyone jump in.
I mean, it's not a clear-cut answer, to be honest. It depends on a number of factors. What's the startup? What area does the startup focus in? Where's the core customer base of that startup? What channels does that core customer base engage in? What are you initially looking to do? Are you looking to gain small number of customers who are going to be, your brand advocates? Are you going mass market straight off the bat? Are you trying to get thousands and thousands of customers straight away? So it's more like answering those questions will lead you to the right channel. That's my opinion. So for example, if you're trying to create trust in financial services, for example, it's worth creating content that proves that you know what you're talking about first. So I know a lot of companies who create a brand, but the first thing to do is start to engage people and educate people and take them on the journey before they go full mass market and hit Facebook ads. Yeah. Because it's always worth, and even as simple as like building SEO on a website. If you've got a unique name for your brand or startup, often the first thing someone will do is go Google them, and if they're page 5 on Google, sometimes that's enough for someone to not trust a brand, to be like, well, the name's unique enough, it should be up there. Why would I use this brand or service if they haven't taken the time to even build up their own SEO, which is not a hugely difficult thing to do. Yeah. So I think it depends on a series of questions, and in answering those questions, you'll probably come to the right channel.
Yeah, I completely agree. You've got to start with the strategy and really understand what are you trying to achieve as a business, what segments are you going after, because otherwise it's like some people just jump in and buy the technology, and that's like buying a Ferrari and driving it at 30 miles an hour.
Yeah, exactly.
You need to
people do many times.
Yeah.
Okay, I'm just looking at oh yes, very close to my heart. Somebody Konstantinos is saying that the focus must be more on human to human approach, and enterprises must find out their why. Oh my gosh, that's something I talk about a lot, and I'm a huge fan of Simon Sinek. He has a brilliant TEDx talk called Finding Your Why. And what he says is that companies are very good at describing what they do and how they do it, but not why they do it. And we've also heard, that very much is a trend, is to working with brands with purpose. But it's a pretty difficult thing. And often you find you think a very simple question, the sort of, who are you, what do you do, how do you do it, and why do you do it? If you ask those questions to some, sales, marketing, the CEO, I bet you will get different answers. So that's a really good place to start, is kind of doing that what, why, how, what, why, how, who, what, why, how, and seeing if you can get consistency, because if you're not consistent within your own leadership team, you're not going to come across as consistent to the outside world. So anybody else like to comment on that, how we go for that? How do companies find their why? How do they, anyone got a good suggestion of how to go about doing that?
I think that's a very, very philosophical topic, and like why, because it can have so many answers. It can be financial, because I want to make money, or it can be something that it's born out of a need, because you struggled with needing that service, and then you come up with idea and you solve a problem for many, many people like yourself. So it really, really, really depends, like why. And I think that why is important, even if you start with I don't know, I'm just smart and I want to create a business and that's my why. But then I think you need to create some kind of strong story in order to resonate with the customers, because I believe more and more the customers want to know the story and want to know that that company has a backbone.
Yeah, I think that's really critical. I'm thinking back to the intro, actually, when Chris Crespo said, you know, people don't want a mortgage, they want a home. So it's about figuring out what people really want and then creating a story around that. I remember when I joined Valitor, we had a mission to be an international payment solutions company. And I said, you already are an international payment solutions company. And we did, you know, strategic research, a strategic insight study, and turns out, you know, what a surprise, nobody cares about payments, but they do care about buying and selling. And so that became the mission statement. The purpose was to make buying and selling easy, because that's actually what people wanted. They didn't really, payments was a means to an end. What they really cared about was buying and selling. But I think I'm going to wrap up here, because we've come to the end of the session. We've been very prompt. So I want to thank all of my panelists for their superb insights. Really interesting session, and please enjoy the rest of the session. And I'm going to hand back to Chris.
Thank you very much.
Thank you. Bye bye. Have a nice day.
Thank you, everyone. That was absolutely fascinating. Thank you very much. And now we're going to move on to our first keynote of the day. But before we do that, just a couple of reminders. You have a panel to the right of your screen where you can ask questions. Please make sure you answer the polls that are being posted there. And just before we introduce the next speaker, we want to post out a question to all participants that you can answer within the chat. And the question is, what is the objective of a loyalty program? So please share your thoughts with us. You have there the panel, share it directly in the chat. And while you do that, I would like to introduce our first keynote speaker of the day, Victor Eftimiadis. I hope I pronounced that right. Victor, forgive me if I made a mistake there, but Victor is an executive director at Axiom Consulting, and he's going to be talking to us about the particularities of loyalty marketing in financial services. We're also going to be hearing a little bit more about what holistic loyalty actually is. And most importantly, which will be a great segue into some of the conversations we'll have later today, what is the role of loyalty programs in the overall customer experience? So without further ado, please, Victor, the stage is yours.
Oh, thank you, Chris. Thank you, QUBE. Thank you, Lily, for the invitation to present to this wonderful audience. It's really an honor for me, and at the same time, a big pleasure to share some ideas about loyalty in financial services. There are many ideas already implemented in the market. Chris already mentioned a few of them in 5 minutes in his introduction. But the problem is that when it comes to implementing loyalty for financial institutions, things seem to become complicated and very slow. So I will try to put them all into perspective and establish a solid base from which a financial institution can actually start building a promising loyalty program. I chose people for the cover slide because loyalty is all about people. Everything revolves around people needs, people behavior, people opinions. By going through the list of participants today, I saw a very good number of great titles like Head of Customer Experience, Head of Client Service, Head of Marketing and Customer Engagement, all of them very clearly stating a responsibility to manage customer relationships, which is what CRM is all about. We are CRM and loyalty. We're gradually adding customer-centric roles in organizations as opposed to the traditional company-centric roles like director, operations manager, etc., which is a clear indication of this trend. We finally got it, actually. I would say that customers make all the decisions. So everything we do should be focused on this reality. Loyalty programs are about that reality as well. To many people, loyalty is part of CRM. To other people, CRM is part of loyalty. And a lot of people think that loyalty is just about rewarding customers. I frankly cannot see the distinction between CRM and loyalty, and I worked for loyalty programs for 22 years now. So if there was a distinction, maybe I would be able to see it. But the idea is to promote what we believe is customer behavior, which is all CRM is about. So let me...
So Victor, I'm just going to interrupt you for 1 second. Your presentation is not showing yet. I don't know if you've shared your screen.
Ah, interesting. Okay. So
I'll just jump off and allow you to share your screen. Thank you so much.
I'm sorry about that. All right. Okay. Are we okay now?
Good to go.
Okay.
Thank you so much. Thank you.
All right. Thanks a lot. Sorry about that. As I was saying, I chose people and I said a lot of different things about that. I was referring to this particular slide of so many beautiful people here. So let's look at the agenda that we promised in the announcement of this event. It was about answering a few fundamental questions. What is loyalty marketing in financial services? Maybe the differences with other industries. How do loyalty programs help organizations shape the customer journey, customer experience? And why are we interested in the customer journey in the first place? And what is holistic loyalty in financial services? So let's start with the first question. We ask this question, maybe not very, we don't have a lot of answers here, but we ask this question in a lot of different settings. And I have here some interesting, no, I actually don't have any interesting answers. Yes, we have one. But in any case, what is usually the answers we get are, loyalty is about, loyalty marketing is about getting more clients, getting customers to be loyal, increasing customer retention, avoiding customer attrition, and so on. But what we need to remember is what the fundamental objective is for everything we do in a business, and this is to make profit. I'm sorry to say that there are probably some organizations that do not look into financial profit, like non-profit organizations, but there is still some element of profit there, maybe of another type, people being more happier, or helping the disabled, these kind of things. But most organizations like ours are looking into profit. So no matter how it is presented and how far in the timeline it may appear of any engagement, in the end, every decision and every initiative we take, with the exception of charity, of course, is and should be driven by profit, which is calculated with this very old and simplified equation. So if everything is driven by profit, how can a loyalty program help in that direction? So first of all, we can increase profit since it's a very simple mathematical equation. We can increase profit by increasing the revenue part or decreasing the cost part, right? So how can we achieve that with a loyalty program? Let's take the first part, the revenue part. We can say that a loyalty program can help us get more customers, that is, more relationships, and make more, let's say, more business out of these particular relationships. So we can actually say that the R part is the relationship part. Similarly, how can we improve the cost? We can improve the cost, that means decreasing the cost, of course, by running targeted campaigns by directing customers to the more profitable channels, making maybe the same transactions, but with a less cost per transaction. Therefore, we can say that the C part are the campaigns and channels of through which we make our marketing. So let's keep this new profit equation in mind when we design our loyalty program. So can we say that loyalty is about loyalty to the company or loyalty to the brand? That would be great, of course. I mean, it would be great having loyalty to the company unconditionally and to the brand. It would automatically mean that people will buy and use our product just because we made it available, like Apple has achieved and became a 2 trillion company. Maybe by the time next time I check, it will be a 3 trillion company. But for all other regular companies like ours, we need to think that what the customer is doing with our product and service, and what do we want them to do instead. Actually, Chris mentioned it in the introduction. He said about people, they want a home, they don't want to make a loan. They do the loan because they have to, so that to get to their goal. He also said that you don't need car insurance, you just need to go from A to B, but you need to do it safely. So we need to understand the driving needs behind people's decisions in order to shape a loyalty program. And in other words, we need to understand the habit. So there is no loyalty to a particular product or to a particular brand or to a particular type of card. If we're talking about car business, for example, what we need to do is to identify the profitable habits. And when I say profitable, I don't mean necessarily financially profitable. They have to be strategically profitable, right? The habits that strategically, in the end, will be profitable to the organization. As we said before, in the far end of any initiative, we have to make some profit, right? So we are talking now, instead of that, to loyalty to the habit that we want customers to develop. So loyalty marketing should not stop at acquiring a new relationship. Loyalty marketing is about pursuing the behavior and the habits about the product or service. So we can go on and on in this discovery of desired habits among our customers. So what do we do once we map these habits? So the first step is to find out what are our customers' habits, our customers' behavior, and then what can we do about them? We need to develop a motivation strategy, a strategy that will drive people to the habits we want repetitively. It sounds like manipulation, don't take me wrong. It's definitely manipulation, but not manipulation of people. We manipulate data and we design proper motivation systems, which can only be effective if we always keep in mind that people can make informed, educated decisions. And there is always the customer's free will to follow us and pick our offers, our campaign offers. We must always remember the free will. In the same speed the customer follows us, he can easily, very easily, and maybe more easily, unfollow and never return back. So we propose a motivation model that is pure common sense. I mean, once you see it, we just organize it and put it in a nice mnemonic name to remember, which is AAQ, or the AQ square for our mathematically minded friends. So what is AAQ? The first A, what is the first A about? The first A is about contributors, all contributors. So we must make sure that all contributors in a business or in a particular transaction get recognized. That could be customers, agents, employees, partners, you name it. Everybody that in some way can affect a decision, a purchasing decision, must be addressed in a loyalty program. The second A is about the activity. All activity must be recognized. We're talking about transactional activity, financial transactions, but also interactions, and we make this distinction to distinguish between transactions that have some kind of financial value versus transactions, interactions that have relationship value. In the end, all of these must be coordinated across all channels, and we should motivate the most profitable, as we said many times so far, behavior. What about the quality? The Q. The first Q is the quantity of the customer relationship. Quantity is expressed based on, it's actually the monetary, if we can call it this way, the monetary dimension of the customer's relationship with us. So the amount of money he spends, the frequency of transacting, the length of time that the customer is with us, which increases the lifetime value of the customer. All of these are important measurements of somebody's loyalty or somebody's, let's say, opportunity for our organization. But there is also the second Q, which is sometimes neglected, and that's the qualitative aspect of the relationship, and that can be expressed by okay, the customer is making a lot of transactional, a lot of transactions, spending a lot of money, but is he doing this in the most profitable way? Is he using the most profitable channels? Is he making payments on time if he has a loan or a credit card balance? Is he using a bigger product, a bigger mix of our products? Because the same customer who has, let's take the insurance industry, for example. If he has a car insurance with us, but his wife has an insurance with another company, he's not using, we are not using, let's say, we didn't exploit the full potential of this customer. So this is not just a wasted revenue, it's also a threat, because the other company may be doing better marketing from us, and then they might get that new car insurance policy the customer has with us back to them as well. So this is how we should map our business in this model, and then we need to define the scope for our motivation strategy. Where do we apply this model? We must look at the customers, rewarding the customer, motivating the customer for each particular transaction that we have, for each particular habit that we identified. But at the same time, we must look at the collective behavior. So we are looking into what we call a holistic approach. So we start with the individual transaction. We then design a program that considers the customer's collective behavior. And finally, we need to look into the customer journey. Let me get into some specific examples about each of these. So looking at transactions, motivating the individual transaction. We
Victor,
need to map.
Sorry to interrupt, Victor. Just to let you know, we're coming to the end of the allotted time. So just if you can take a couple of minutes just to give us some final thoughts.
Yes.
So apologies for the interruption.
Yeah. So we have the transaction rewards, the motivation about the transaction. Like, we have to analyze our different lines of business, products, transaction categories, transaction types, and channels, and motivate the particular transaction behavior we want per transaction, but also look at the collective behavior of our customers, and then, of course, about the customer journey. We need to, I need to do this through an example. And actually, Chris mentioned this. It's very magical that Chris mentioned this specific example. Somebody that wants to buy car insurance he can plan for the purchase, he can finance it, he can purchase the car and wait for its arrival, and then he starts or she starts using it. But in all this process, the insurance company only participated. I mean, this process may take 10 to 15 years, using the car, but the insurance company only participates in, let's say, in a few hours discussion with the customer. And maybe then when the customer renews the policy or when the customer makes a claim. So the question is, how can an insurance company or any company be more present in different stages of the life cycle of the customer's journey? And that is possible through coalitions. So by building coalitions, we can manage, for example, in this case, partner with the service providers so that we have more contact with the customer, and at the same time get more information, which might lead to improving our product. So if, for example, we know when the customer makes a service or changes his tires at a reputable partner of ours, us being the insurance company, then we can probably reduce the policy fees so that we get more competitive. All of this can be summarized in one statement that we promised to explain. Sorry, I moved to a different slide by accident. And that's holistic loyalty. What is holistic loyalty? In a nutshell, is to measure, motivate, and reward our customers and our partners' behavior. Remember the contributors across all products through all channels by understanding first their needs and habits and opinions, and that's done through analytics that you extensively discussed before. So thank you for your attention. I don't know if we have time for questions, but we can address them later.
Okay, thank you very much, Victor, for that lovely presentation. Thank you. It's now my great pleasure to introduce our next speaker, Shiri Grosbar. She's an entrepreneur with over 20 years experience in establishing companies from scratch, as well as working within larger companies in a variety of sectors. She's one of 3 founders of GCMO, which is a community of Israel's leading CMOs from global companies and also from the employer brand community. And she's currently head of culture and innovation at AppsFlyer, very interesting company. We talked about attribution earlier in my panel session. So over to you, Shiri, to tell us about the shift into employee branding.
Okay, thank you very much, Christine. Can you hear me well?
Can, yes.
Okay, cool. I would like a heads up just like a few minutes before, so I won't go into other people's session. I know that you're very cautious of time. So hi, everyone, and thank you for joining me. My name is Shiri Grosbar. I consider myself an entrepreneur. I co-founded 2 companies, one back in 2004. We did the first lead generation for higher education here in Israel. It was very successful and was bought by the largest media company here in Israel. Then I founded Join, which is a digital talent agency in 2012, still up and running. And 2 years ago, I had the privilege of joining AppsFlyer. I am a feminist, a women's advocate, and I also promote awareness to the Holocaust as a 3rd generation to single-soul survivors, both my grandparents, who by miracle managed to produce my father. So this is also something I'm very passionate about, how to exert technology into these places in order to preserve the memory. But it has nothing to do with what I'm going to talk about today. I have 15 minutes, so I'll be brief with it. I want to talk about employee brand. And if you are familiar with it, then you should be saying something like, okay, maybe she's got it wrong. Like, why is this person talking about employee brand? You must know this as employer brand. So just a few words about employer brand, a kind of a noun that came to life in the early 90s, okay, in a sense became, you know, widely adopted by global management community. And employer brand basically, in a nutshell, describes the employer's reputation, okay, as a place to work for. We as marketeers, we all know about, you know, unique value proposition. So it's kind of thinking about the same thing. What is our unique value proposition, not to our customers, but for our people, the kind of people that we want to bring into the company? What kind of talents do I want to attract? You know, people who have the same values, who understand who we are and what we do. So it's basically looking at yourself as a brand, but not still in the customers and partners, but really towards, first of all and foremost, your people. And I want to talk briefly about a very, very common mistake made a lot when dealing with employer brand. I'll soon talk about employee brand and why I think it's much better than employer brand. But a lot of companies, when you talk about employer brand, they usually would go for, in my opinion, the easy place, which is candidates. Okay, how do I attract the best candidates? How do I bring them into the company? And I think it's just one thing to look at when you're looking about employee brand, but not everything. I think that a lot of marketeers go for that because it's easier to quantitate. Okay, we're in the world of attribution, so I know about that. It's easy to show that here. Listen, you know, back then when we used to open a job posting, we only got like 100 resumes, and now we did this brilliant employer brand campaign with all our values, and now we're getting 300 resumes. Is that a good thing? Because in my perspective, no, you've just really loaded your, you know, your talent team and not necessarily gotten, you know, better CVs. So I think it's about attracting a certain kind of talent, but not all. I think that when you're dealing with employer reputation, you're dealing with everyone that has an interface with your company. It's investors, it's vendors. And for me, okay, we live in Israel, so it's really hot here. So the guy who delivers, I don't know, the lunchbox at a hot afternoon, I want his experience with my organization to be good. What we usually do is we'll pull out a chair outside and have some cold water and kind of sign saying, dude, take 5 minutes, it's a really hot day. So what I'm basically saying that it's not just about candidates, it's about everyone touching your company. I'm gonna go faster here. Oh, wait, this is how I do it. Sorry. Okay, so a lot of the time I'm often asked, okay, so when do we need to start, you know, dealing with employee brand? I know I haven't said what's the difference between employee brand and employer brand. I'll do it in just 1 second. But when we talk about employer brand, how soon should we be talking about it? I have 3 kids. And I think it's the same with kids. Like, how soon do I need to start educating them? So, my opinion, I don't know, the day you had them, you know, they're out there. Let's start. So I do realize that not all companies, especially startups and small companies, have the resource or the luxury to, you know, come up with these elaborative employer brand campaigns. But I do firmly and strongly believe that it has to be in their top of mind and awareness. Okay. Founders and, you know, the few people in a startup group should be thinking about it. Okay, they don't have the energy now because they need to put on, you know, a product and an MVP and, you know, prove to the world their new solution, but they do need to be concerned about it in the sense that they need to talk about it and think about it. What kind of company we want to, you know, build here, and what kind of people do we want to attract to the company? And that could be the base for employee brand. And I'm going to jump to really explaining employee brand versus employer brand. So in 2010, Tony Hsieh, the late Tony Hsieh, has launched a book. You know, he was the legendary CEO of Zappos, and he wrote Delivering Happiness. And it was a real, I would say, mind-blowing eye-opening. It was a very different, kind of book and concepts to be talking about in 2010. Basically, when you talked about delivering happiness, he said that the core idea was to first get the kind of people that delivering happiness was their core value. People who really get on by, their passion is by helping people, and you get them into the company, and then you become the greatest company to deliver happiness. Tony Hsieh was actually the first person to come up with these really wild ideas. He said, let's give every person that comes into the company $5,000 after 2 months and ask them to quit, to kind of reinforce, do you really want to be here? Do you want to be a part of it? He had some really wild concepts. The one that I think is the most powerful one is basically saying that the main role, the chief role, and the main concern of a CEO in the organization should be around culture. That should be the CEO's #1 concern, which of course I could really relate to. But having said all these wonderful praises about Tony Hsieh, and I do believe that he was, the start of a revolution, I don't believe in happy. Okay, now I have to kind of explain this statement. I truly believe in everyone's right to be happy, and I wish everyone would be happy everywhere. But happiness is kind of a hard place to deal with for 2 reasons, okay? One, what makes me happy doesn't necessarily make other people happy, and we are dealing with people, okay? Like snowflakes. No one is quite the same as the other. And even if we do find this common ground of, something that makes everyone happy, okay? Rainbows, puppies, babies, okay? I don't know what's going on with everyone in their personal life right now. People could be having, a really hard time going through a divorce, a sick relative, a sick baby on their shoulder for the night, and making them happy is a really, really big task for the workplace. So as I said, I'm the last person to say that happiness is not important. I value happiness. What I suggest to organization, and that meets employee brand, is instead of making your employees happy, why don't you try and make them proud? And why do I think proud is better than happy? I think proud allows us as marketeers more room to work with. That's A. And B, because we want to use employee brand, and I think you kind of got it, what we want to do is harness our people, not only to carry the message, but also craft it. And I think people have an easier time sharing and promoting being proud than being happy. Actually, a study has been made that the most unhappy people are the ones posting on social media how happy they are. But proud is different. If you are going through a divorce or you had a sick child on your shoulder, if your company has done something that made you really proud, you'll be more eager to share. So as marketeers, I hope just like me, you love acronyms. We have to acronym everything. So I'm actually going to start with the second one, EVP, because I think it's more familiar to everyone. Okay, so employer value proposition is basically everything that a company has to offer its prospective employees, the candidate. We're talking all benefits, okay, and salary and gym and everything that goes around it. But if you take it one step further, what we want to do an employer brand is understand what are the core values of the company, and then understand how you attract the people that these values are theirs, that they can relate to that. The reason I like this approach less is it's kind of like a top to bottom approach. It's like the bunch of the CEO and top management sit together and say, okay, this is who we are, this is what we are, and then it kind of comes down, and it's it's a great campaign, but doesn't really speak the voice of the people. So that brings me to the second acronym, which maybe you're not as familiar with, it's VOE, and that's the voice of employee. If you want to do employee brand and not employer brand. It basically means that you believe that you have the best talent in your company, and you want to attract that kind of talent. When you think about it, it's actually, well, I wouldn't say simpler, but instead of bringing in, I don't know, these big agencies, companies to come and do this great campaign, when you do voice of employee, you can't really have someone from the outside come in. You need to ask your own people. So this is basically what I got to do in 2019 at AppsFlyer. After we did an engagement survey. An engagement survey is basically when we survey everyone in the company about, you know, their satisfaction with all sorts of different things within the company. It could be tools, it could be company pride, social connectivity, sense of belonging, and so forth on. And I got the ability to travel to 13 out of our 19 offices and have a roundtable discussion. A roundtable discussion is basically sitting with the people, no computers and no managers in the room, which was also important. And basically what I asked was 3 questions. The first one was, what brought you to work for AppsFlyer? Okay, because what we wanted to do is understand what attracts the people. And then I asked, what keeps you here today? And then the third question, and actually the most not really asked question usually, is what was the gap between what you thought you were going to do and how you thought you were going to, you know, live your life in the company and what you're actually doing. And that's a really interesting place for employee brand and people experience marketing to work with, to really understand how to best serve what we are to the candidates outside. So of course this was really, really interesting. And I'm going to share 3 things that I think are the most important that we learned from this and we are implementing today as a strategy. Okay, so the first thing when you want to do employee brand and you want to get, you know, harness your employees to be the carrier of the message, well, one advice is never call them ambassadors. I'm a strong believer that, you know, until the UN offers you serious money, you're not an ambassador of anyone. You're there for work. But if you create a program, for instance, that promotes personal skills like speaking skills, writing skills, LinkedIn skills, Facebook skills, and even camera skills, and this is part of what we did. We had a program that was called DNAF, and we allowed people from all countries and all different business units to come in. We, of course, made it also, you know, you had to go through tests in order to come in, and we gave them that. And we said very clearly, we said, you know, this is for you guys to personally grow and to use this to promote yourself. Should you want to, you know, write something about AppsFlyer, we want to give you the best tools to do that. Okay, so first thing, if you want to harness the people, you can't just like go, oh yeah, here's the message, here's the picture, why don't you go write something about it? You have to think of what's in it for them. Okay, and part of what's in it for them is that we then later founded into a community called the DNAF, and they're a really active community, also bringing stories to us, and sometimes we just kind of like, we bring them the photos, the visuals that they need. Okay, second most important thing for employee brand to work is this: marketing has to work with HR. I'm not sure, you know, what kind of bond you have within your company between marketing and HR, and a lot of people, in a lot of companies, these are 2 people that might not really be talking to each other on the day-to-day, and they need to start talking to each other, because the marketing is the face of it, okay? It's the medium, it's the message, but there has to be substance behind this. And HR is your natural partner for creating a kick-ass employee brand, because they are connected to the people. They are the right department to go and ask and do something like the roundtable. Again, just one method out of many, but that I discussed before. I'm almost done, Chris. That's why you came up for a second. Yeah, okay. Moving on. Okay. I would say that the most important thing out of everything, if you really want to succeed in employee brand, is this one. Guys, there are no shortcuts here, okay? Unlike any other, commodity that you've ever purchased and you didn't like, okay? So you could either say, okay, I'm not gonna buy this brand again. If you're young and millennial and you have some time, so you can go trash them on social media and say what a bad buy that was. But when it comes to your personal career, when you're sold something, when you're sold on a company that's, I don't know, work hard, play hard, and think about it during Corona time, COVID time, we don't even get to go to the site locally. So it's really all you have to kind of conduct from the website and the Zoom or, Google Hangouts that you've made together. So when you're sold on something and then you buy the product, quote unquote, come to the company, and then you realize that it's really different from what you thought, it's not the same, right, as buying a product that, didn't really deliver. This is your career. This goes into your LinkedIn profile. This goes into, and I've seen a lot of people over the years that have come to a bad place, but they didn't want to leave after 3 months because how would that look on their resume? This could really be avoided, and I think some of the responsibility, well, of course, of the candidates to really check thoroughly, but it's also about the companies. You can't just say, oh, I want to be like that company and come up with this great campaign and have nothing behind it, because people will be disapproved and will be frustrated, and it's not like just buying something else. It's your career, it's your life. Moving on. Okay, this is something that I'm really proud of. We've just received it a few months ago. Now, I'm sure you're all familiar with all these top 100 companies to work for in the Silicon Valley and top 100 to work for, with the best place to work for, and so on and so on. The reasons why we're most proud of this one is because we were voted a high-rated private cloud company to work for by Battery, and they collect the research based on Glassdoor. If you're not familiar with Glassdoor is kind of like the LinkedIn for people's review. You can go into each company and see what people who are working or previously worked for the company has to say about it. So when you're promoting employee brand, this one is the one that you want. The people really saying, we cannot control what people are saying that. That is about eating your own dog food. You have to, day in and day out, deliver great people experience that make your people proud, and there are no shortcuts about it. But when you do it right and you devote the time for it, and if you remember, I told you we started in 2019. That was like early 2019. We've just recently got this. This has been a 2-year, journey, and we're not done yet. So hopefully by this time, I managed to, persuade you. It's the last one, Chris. Last slide. I managed to persuade you that employee brand is really important and much better than employer brand. This is just kind of a fun example. I can't say the last year because then we need like a 22-slide presentation, but for something that we do in every communication with the company, every swag, everything that we do, we try to keep 3 rules. We try to keep it personalized. Okay, I know you. I know that you are, you're sensitive to gluten. I will not send you beer. I will send you gluten-free beer. I don't know if you can see it because it's a small presentation. There's a cake here that was sent to someone, and it's handwritten because that someone really kind of needed it at that time. But really know your audience. Keep it personal, just like the guy that came to, on the hot day and you put on the drink for her. Know your employees and give it to them as personal as you can. The second thing is make it meaningful. Okay, don't just do things for the sake of doing them. A lot of time people say tradition. Okay, I have the highest respect for tradition, but we gotta ask ourselves, are we doing it just because we're doing it, or does it actually promote one of our values? And if the answer is no, then I would say drop it. It has to promote a value. Okay, we don't have enough time and energy a day to spend it on things that are not meaningful. And the last one is engagement, but not that kind of like on Facebook or Instagram, like real engagement, the one that creates a sense of belonging. Okay, we all want to be a part of something bigger. And when you come to your people and you say, listen, we want you to promote the employee brand for us, that actually makes them feel that they're part of something bigger, and it promotes sense of belonging. And swag. I can't say enough about swag. Again, this might be something for app flyers, but we like our swags. I've actually never seen our CEO wearing anything but an app flyer t-shirt, and we play around with it a lot, and we have a lot of engagement. If you can see here on the side, home is where the app flyer is, was actually a slogan that was chosen by our employees for the t-shirt for last summer. So that's it for me. I do have a lot more to say about this subject, but this is supposed to be kind of like a breather, or a palate cleanser. So I thank you for the opportunity.
Thank you very much, Siri. If you have any questions, please feel free to ask them on the chat. I'm sure Siri will be happy to answer them via text. And now we're going to move on to the second and last panel of the day. I'll invite the panelists to join the stage. And while they do that, I think we're redefining the glossary of terms of financial services marketing. I think we've heard a number of really sticky terms throughout the day today. We've talked about doing gymnastics with your data, and we've talked about loyalty to the habit and employee branding. So I love this. I think we should keep this coming. So I can see Christian. Hi, Christian. Great to see you again. Jenny, hi, welcome.
Hi, hello.
Do we have Christophe joining us as well? Christophe, are you there? We can't see you on stage. All right, well, while Christophe joins us, I'm going to introduce the panel. We're going to be talking about customer experience in financial services and its relationship with marketing. We're going to do this as a bit as an informal chat. So just to get the conversation started, let's just lay the terms. What is customer experience in financial services, and why is it different to any other industry? Jenny, what about getting us started?
Well, actually, I don't know if it's that much different from other industries. And what, from my experience, working quite a bit with development of the customer experience within the bank, I can see the growing need for working in transversal teams and to understand each other within the bank. I found Shira's presentation previously super interesting because I think it's very important more and more to that customer experience, to actually be able to deliver that. You need to understand how to work together and create pride within the company. And that can be a little bit tricky, especially if you're coming from a fairly traditional industry with traditional roles. You have to kind of reinvent yourself and how you're going to work and what you're bringing to the table. But every time we have successfully delivered a project or an enhanced customer experience project, when you have that feeling of being able to work together and deliver something together with people from departments that you normally maybe not work with, you create something very special. And I think that in itself can drive development and new ideas and creativity and the urge of actually striving for a high level of engagement and pride and creativity and to do great things together. I think that's super important. And that in itself, I think, is delivering a great customer experience in the end, because it's so many parts that needs to play together. It's customer experience. It's not a marketing thing for me. It's something where all the touch points the customer have, and it could be the IT, it could be the risk part, it could be finance, it could be all things together. It's creating the ultimate customer experience, and so it's something that needs to work in an external way, but also very much in an internal way. And I think that is one maybe of the biggest challenges.
Absolutely. And Jenny, apologies with the excitement of getting into the insights. I didn't even give you a chance to introduce yourself. Why don't you tell us very quickly who you are and what you do?
Yes, my name is Jenny Gaffner. I'm head of marketing at BNP Paribas Personal Finance in Denmark. We're located in Copenhagen. My background is digital banking and e-commerce. So.
Wonderful. So let me move over to Christian. Christian, give us a quick introduction of who you are and also your thoughts on this idea of customer experience in financial services and marketing.
Yeah, sure. Christian Ducov, work at Danske Bank. Have a background in designing financial solutions. Actually been living in Australia for 15 years until I returned about a year ago, heading up a fintech that specialized in deep integration of financial services in third-party platforms. So I very much believe in financial services being part of the way people go about their work and go about their everyday, and not just a destination in itself. And I think that what Jenny is saying is very true. CX in financial services is a lot broader than most people think about it. We've kind of tended to tackle the shiny bits, the customer interfaces and all the things that people interact with directly. I'm on the business side. So what we're dealing with a lot is we might have great solutions, but our business customers don't know how to integrate with them because our documentation is written for, really technical people. Just small things like error messages. Nobody understands what's actually gone wrong, which means we have to go through 3 layers of support to figure out, what the customer needs to do. And sometimes it's just, changing a little thing in their file. So it's a big journey we're on where we're looking at, as Jenny says, everything that the customer actually touches and not just the shiny parts.
Yeah.
Yes, I completely agree with you. I mean, it's the tricky parts that actually probably makes the most importance and the largest impact of the customer experience. It's not me putting up some new colors in some campaign or whatever. It's actually the wording in a legal document, or what type of response you get from a tech part, or stuff like that. It's I think there's a lot of things to be done on that part as well from our industry.
Absolutely. And Christoph, take a few moments to tell us who you are, and also what's your take on this whole idea of customer experience, especially from you who perhaps has a different angle on this coming from outside financial services.
Hi, Chris. Hi, guys. Nice to meet you. Pleasure to be here. So about me, I'm head of group marketing in Raiffeisen Bank International. We are located in Austria, and we run bank or financial services in 13 countries in CEE. And this is my role, basically. Before I worked for a company called Runtastic, part of Adidas, so a truly B2C digital company. And this is also one of my more or less focus points or experience points, very much digital driven. With regards to customer experience, I would say there is no such thing as customer experience or one customer experience, because you solve different problems for different people. So basically what experience for the people or the clients or the customers. So this, I think, is really crucial.
Absolutely. Absolutely. Well, thank you very much for that. So we're talking about customer experience. We're talking about some of the challenges. I'm sure you will all agree with me that measuring customer experience and measuring the impact of whatever we do in customer experience is extremely complicated. What's your experience in bringing these insights to light about the effectiveness of your activities in customer experience? Anyone?
I think the measurement of the NPS is a rather powerful tool to measure both the marketing part, the application forms, the contact with the customer, but also how you work with within the operations part, the customer service. You can have a holistic tracking of what you're delivering to the customer, and that will be a very powerful tool for us to work more and more with. And also it's a good tool for engaging other parts of the company, not just the marketing and customer service, since it's a tracking tool for the whole transformation part where many departments are involved in.
Mm-hmm. Yeah, I agree. It's something we are working on a lot as well. Again, not just measuring what's happening in front end. Of course, it's important what the customers are doing in terms of, basically how many contact points they need to do anything. And we're finding that today, that especially again on the business customer side, there's way too many steps and there's too many manual interventions that need to happen for the customers to achieve what they're trying to achieve. So what we're really trying to do is simplifying a lot of the processes, make it a lot more self-serviced, not so we can cut back on service, but so we can focus the service where it's really needed and where automating just isn't really doable.
I think based on what we just heard, there are two dimensions. One is collecting the data and the necessary data, I would say, so that's a tricky part. And also to combine the collections so that everybody has access to it, who needs it. So with regards to what Jenny said, also that we have this cross-functional application of data. And then the second part, as I just mentioned, is the application of it. What do we really do with data? And so, I mean, on theory, on a blank sheet of paper, it's all okay, data is key and everything. But in real life, it's really tricky, even the first stage, to collect the data where you need it, and then kind of aggregate it so that you can utilize it for marketing or other activities. Yeah, conversion rate optimizations as part of the funnel optimization and stuff like this. So I think this is a crucial foundation, both to collect and aggregate the data.
Yeah, I think that's very relevant, and we talked in the earlier panel about the sheer amount of data that's being generated, and there was some discussion around translating that data into insights that tell us what the customer actually needs, right? Which is also going through another barrier between the organization and the external world and the customer, which is I'm sure is a challenge for most organizations today. What about Jenny? You talked earlier about cooperation. About bringing other functions together to cooperate together in the creation of a seamless customer experience. How are your organizations being able to break those silos to achieve a unified customer experience? Tell us a little bit about that. And let's start again with you, Jenny.
We are looking quite a bit at industries, not what other people in the banking industry is doing. Sorry, Christian, but no. But I think it's a great source of inspiration to look how successful e-commerce companies are working, and other successful companies in general. One company that we have been looking at and been very inspired by is Spotify. They are very good at working in transversal teams, and their organization is, from some point of view, fairly traditional, but they have managed to set up teams that is working in a very agile and smart and smooth way. BNP is a large bank, and thanks to that, I have many inspirational colleagues around the world that where we can kind of discuss how to set up smart ways of working, due to the fact that we're actually part of a fairly traditional industry. It needs that you challenge yourself and some ways of working, and that maybe is one of our biggest challenges, that if you come from a fairly old and traditional bank, even if you want to be agile, you want to be to be digital and work with UX and be very like forefront. Yes, we're good at that, but what we're not good at maybe, or the biggest challenge, is the culture in itself, that it's very comfortable to get back to standardized KPIs, old ways of working, looking at your own thing to deliver that. And it's something that you always have to be attentive to bring down those silos, to reach out, to have a great attitude, to set up projects that you can be proud of together, and to have common goals. One thing is, for example, you have to have common KPIs with your risk team, or common KPIs with your, I don't know, IT department, that you are sharing the KPIs to go into the same direction. I think that is super crucial, and something we have to be aware of the importance of.
Yeah, absolutely. I think that the best ideas will not flourish if they're not planted within the appropriate culture, and that's something that seems to trump everything else that financial service organizations try to do. Christoph, tell us a little bit about your thoughts on this matter.
I'm not sure how to phrase it, but I think this collaboration is really crucial. So adding to what we just heard, that there is common KPIs, but there's also common roadmaps. So it's this you face in real life. Okay, of course, a customer experience is important, but it's also important to fix risk engines. It's also important to do this, and that. Yeah. So it's really very crucial for the success that you can kind of attribute the value of a better customer experience to the business success. So this is what you're always fighting. You're always fighting IT resources at the end of the day, and also creative or UI UX resources. So that's why you really have to kind of make a clear business case. What do we gain? What's the advantage once we improve this or that feature or this or that process, or if we say even the highest change, like a new product, because we know this would kill it. Yeah, so that's maybe the most important, alignment and then attribution of what you're doing.
Great, thank you, Christoph. Christian, is Danske Bank doing anything specific to collaborate across silos, across business areas for customer experience?
I mean, Jenny mentioned Spotify, and we've been through a massive reorganization the last year, based on the Spotify model, obviously slightly tuned to a banking environment. But we've kind of done up with having the big development organization and all the things that you've been used to from Nordea as well, and working in tribes, squads, clusters. It's a much more collaborative way of working, but it also takes a massive mind shift for the employees to work that way. So a lot of people have had to really step it up and take ownership that they've never had before, and go, well, this product needs to work because it's my responsibility now. It's not just something in my area that somebody needs to take care of. No, it's me. And that makes a really big difference. And that means that you start looking at different facets that you've never looked at before. You might be, an IT manager that now also has the responsibility to make sure that Frontline can actually sell this product. It actually has to make sense. It doesn't just have to work. So it's something that's really changing the whole dynamics in the bank, and definitely for the better. But it's going to take a bit of time before it's settled and we really get the benefits out of it.
Yeah. So back to culture and mindset, essentially.
Yeah, exactly.
Right. Well, we have just very quickly. I'd like to just ask you a question to all three of you. Which is the one challenge, the main challenge that marketeers in financial services face in 2021? Very quickly. Jenny, let's start with you.
And back to the organization. I think the major challenge is not really in the marketing part, but rather in how we focus and work together in order to create a much better customer experience and to remove pain points as fast as possible, and to get to that culture. That's what I would say is my major challenge, at least. Maybe I call Christian after this meeting, get some inspiration.
Please do.
Fantastic. Christoph, what's the main challenge for you?
I mean, not only for 21, but in general, I think we as marketers face the challenge of justification of our costs, because we kind of are a pure negative driver of EBITDA. So I think attribution to really show the value, what we do, and what impact it has on the gross income or whatever top line metric you have. This is the main challenge. Yeah.
Great. And Christian, you've got the closing words here.
Yeah, it's kind of become the opposite situation of what it was a few years ago. We now have a challenge of showing the market why we're still relevant, rather than the fintech showing why they're relevant compared to the banks.
Indeed. Well, some very thought-provoking words there. And with that, I'm going to have to close this panel, as I think we're we're just 2 minutes before the end of the whole event. So thank you very much to the panelists. Thank you very much for your time and for your insights.
Thank you.
And
thank you very much.
Thank you all. And hand over back to Christine for some closing remarks.
Okay, thank you, Chris. Well, gosh, so many great thoughts during this session today. It's hard to summarize very succinctly, but I'm just going to say a few takeaways that I had is obviously we've talked a lot about digital, and we've had debate about, well, I think we all agree that the world had already gone digital and it's just been accelerated through COVID. It's not like digital suddenly appeared out of nowhere. There's been a lot more focus on value, more focus on the product, but really what the product does for the customer. And I loved, you know, that last session thinking about not just tackling the shiny interfaces, but really thinking about things like, you know, is the legal wording of the document just, you know, unreadable for customers, and you know, can they access the tech documentation, etc. So not just focusing on the shiny interfaces. I love the phrase, you know, having to do gymnastics with our data. So, you know, in order to understand this ever-changing world, we've got to get really good at data. And do we need data scientists for that? Or does every marketeer need to be able to interpret or do the gymnastics with the data in some way? We need to look at some new strategies like crowdfunding, for example, or the affiliate marketing strategies. We need a few campaigns around strategic change that came up, and more innovative content, you know, that's shareable. So I think I remember from Victor, what I remember there is the double A, the double Q. Can we all remember what that was? And a few things that stood out for me from Sherry's presentation was, you know, people are like snowflakes. No two people are the same, and proud is better than happy. So I'm going to stop on that note because I think that was really insightful.
Absolutely, thank you very much, Christine. Just to point out that the results of the polls are being shared on the screen, so you can see how everyone voted. This is, I think, very, very interesting. Gives us a lot of food for thought. Just for me to say, first of all, thanks to all the speakers and the panelists. It's been really, really an insight-packed morning. So thank you all for all the food for thought that you've given us. Thank you to all the organizers. Please make sure that you follow QUBE Events on LinkedIn to find out more about upcoming events. And with that, I'll hand the word over to Lily for just some last words.
Yes, thank you so much. That was such a great launch of a first time, the evolution of financial marketing. Thank you for everybody for their support, for their participation, for your comments, for sticking with us for the duration of the event. We had a great turnout. We're so happy. Thank you to all the speakers for sharing their insights, for the conversations, for the panelists, all those shared views. There's so much there. There's so much there. And I just thank you all so much for being there. In line with everything we were saying, there is an email following or that will have an evaluation form. We would love to get your feedback. We'd love to get some of those stats in as well. So if you can share your views, share some testimonials, all part of our journey as well. QUBE is doing an amazing job. We're doing some great events, having some amazing thought leaders support our events. So thank you to everybody that supports us. Please do follow us on LinkedIn. Please do subscribe to our YouTube channel, QUBE Intelligence. This event will be uploaded onto our QUBE Intelligence website. So thank you to everybody. Thank you so much to our chairman, Chris and Chris. Great teamwork there, great efforts there, and thanks so much for everything that you did today. It made the event go perfectly. Martha?
Yeah, big thank you. Amazing. Thank you, all of the speakers. You've been like such a great job. Thank you, Chris. And Chris, that was amazing. Yeah, we're looking forward for the next ones.
Thank you, everybody. Have a lovely day, and we will all be in touch. Thank you so much. Thank you.
Thank you all.
Bye, everyone.
Bye.